Some technicals now for Forex Trades. Mario Singh is Director of Training and Education at fxprimus.com and staying with us in Tokyo too, Alistair Newton of Nomura International. Mario, let's take a look at euro-dollar first up. We saw on the charts this morning, it's coming back a little bit. We're sitting at the 131.30 level roughly. This seems to be on the back of hopes that the US has pledged further IMF support to Europe.
Well, this is how it's going to be, because iron was bailed out with $85 billion, and the way iron is moving, the whole chart of euro-dollar is moving exactly the same way how it reacted to Greece. So what's been happening now with technical levels about 134.50, I'm still seeing euro-dollar popping up a little bit, and then it's going to come straight down. So what's going to be happening here, we're looking straight at the chart right now. We are looking at technical levels over here and here. Over there, I'll be seeing how the euro-dollar will actually be popping up to about 134.50 and then coming straight down again.
Mario, Bernie in Hong Kong, I'm just curious. On the way down, the euro broke the 200-day moving average with a vengeance. And also, we saw a 50% Fibonacci retrace, which was quite disturbing, that broke the normal rules of engagement. Did that sort of reset the parameters for euro trade in any way from a technical perspective?
Not exactly, Bernie. What's been happening, because after it fell, the huge reversal about 142, it came back down to find the retracement at the 61.8 level. So when it comes back down, all right, I'm looking at exactly here. All right, we're looking at the charts, exactly where those lines are. Now it's going to be exactly about, say, 134.50, and at that point, when it finds the retracement at 23.8%, it's exactly the brief rally is going to go up, and then it's going to head back down again, simply because the huge downtrend of 1,000 pips has totally negated the uptrend for the last 4 months.
Okay, downtrend. Let's get to Alistair. And there's a lot of hope heading up to the ECB meeting that we might see some further liquidity measures by the central bank to help out the economy over there. Is this going to be disappointing, because there's a lot of dissent on the ECB board? There's no consensus at this stage for further liquidity injections.
Honestly, I really don't know what the ECB is going to do this week, Karen, but let's look back historically and keep in mind that despite the fact that there have consistently been differing voices coming out of Frankfurt, the ECB has done whatever it's needed to do to keep the banking system operating across Europe. We saw them helping the Irish banks just a few weeks ago as one of the biggest groups taking advantage of the ECB special facilities. I wouldn't expect the ECB to be stepping back now at what is still a very delicate time in Europe. The Irish deal has not been nailed down, as I was saying earlier in the programme. Continuing concerns about Portugal, and with all due respect to Prime Minister Zapatero, for sure, Spain has done reasonably well so far. We have that bond issuance going out today. As you were noting earlier, we're going to be looking at that very carefully, but Spain still has a long way to go. And politically, it is going to be very difficult for Zapatero to push through the reforms which he needs to push through to convince markets, even though the Spanish have gone quite a long way in the last few months towards cleaning up the cajas, as Zapatero himself was claiming in your interview.
It's amazing that years after the fact, with the benefit of hindsight and all this experience dealing with financial crises, that we're going through another iteration of this. Mario, let's bring you back in. What's the next big trade out there? I know you've got one or two other very distinct graphical analyses to share with us. What's the next big trade? Yen's involved in one of them, correct?
Well, the yen's involved a bit more since the chart came out for the Aussie dollar. Let's just look at the Aussie dollar right now. Now, it just completed a whole big head and shoulders right over there. You see the whole head and shoulders in that particular area. Now, it broke the neckline in this particular region. So once it closes down below the neckline, I'm seeing a huge support over at this level here. So I'm seeing the Aussie dollar heading downwards, especially since because risk has been negated in the whole markets. We saw how China is increasing their credit reserve ratio, and the whole markets are expecting that China will move to increase interest rates. So having said that, I see the Aussie dollar heading downwards towards 94.50.
All right. Mario, we're a little bit short on time today, but appreciate your time and preparation for that, and we'll share more with you very, very soon. Mario Singh joining us there.